Hey everybody, this is Jose Blasco. We are about to get started. Can I have a quick sound check? As always, a quick hello on the chat box would do. That would be my indication, so I know that you hear me. All is good when it comes to technology, sound, video, etc. And we are ready to get started. So please go ahead, quick hello, and that way we are ready to get started. Okay, I'll position myself here on the bottom right of the screen. How are you, everybody? Good to see you. And that's it. It's basically time to get started. So welcome to the session, my friends. We are live. Today it's February 1st, 2021, beginning of the month. Definitely many things going on in the market at all levels with all markets. It's being fun. Currency, we're moving nice today. Again, all sort of things. So the idea is that we're going to spend 45 minutes together. We're going to be looking at futures markets, identifying intraday trading opportunities. So the idea is to catch a few of those quick in and outs. And go over the method, the process, the rationale, the tools. Certainly happy to see you typing your questions on the chat box. I love that. So be engaged, don't be shy, and that way we can interact in a more efficient manner. Obviously I'll be following some sort of a predefined sequence, to lead you into those executions and so on. But obviously, feel free to type and stop me anytime so I can help you better. Okay. Very nice, Gary. Good to see you, Johnny, Sandeep. Very nice, everybody. Let's get started. Quick one disclaimer on the upper part of the screen. I almost forgot. Please go ahead and read it carefully. As always, this is important information, so make sure you don't skip it, and that way, you're well informed. Very good. Let's begin. So I'm just gonna close the introduction slide so we can now focus on the trading itself. This is Tradestation, beautiful platform. We have our red screen. We will be opening up and setting up charts as well, which is how we plan the trades. But the question is, even before you start planning the trade, is which market should I trade today, right? And not only which market should I trade today, which market should I trade now that I happen to be in front of my screen ready to trade. And this is when the red screen becomes very, very handy. We just saw a couple of flashing golden alerts there on crude oil. We can see now. Let me freeze the screen so you see it. Okay, so flashing alert here on crude oil. Again, I just froze the screen so it doesn't move. Okay, CL is crude oil. We are looking at 15-minute climate, near sensible. The background color is red. That means it's a down climate. So let's go for it. Let's go ahead and begin our day taking a look at crude oil. I will load the 15-minute time frame set of charts. We'll have 15-minute time frame for the common time frame to identify the climate, and then we're going to be working on edge timeframes to set our entries. I always mention that always it's important, but certainly when we deal with commodities, because expiration dates vary so much, okay, I recommend you to use a website such as barchart.com. Could be any other website, or maybe you just made a note for yourself. But it's always a healthy practice to go ahead and check what's going on with that particular contract. Notice this website recommend to be trading the edge contract. I'm always a bit more skeptical than that, even though they are right most of the times. But I always like to look at volume and open interest and make sure those are the greatest values, which is the case. Okay, greatest volume, greatest open interest, and it does coincide with the letter H. So great, it's approved, and therefore we're gonna go with the H. And the question is it the one I have on the chart? Yes, I do have the H on the chart, so I don't need to change anything. I'm ready to go. Okay, it's critical again with commodities that change expiration dates very often, as depending on the commodity, but sometimes even some of them every month. So it's easy to get distracted, and next thing you know, you are trading the wrong contract, and then you get stopped out, and you get a ton of slippage, and you wonder why. Okay, so make sure you are using the right expiration month. Okay, so now let's begin planning our trade, and we're gonna start with the climate. Okay, so I'm loading the climate here on the 15-minute time frame. So the climate is telling us thick and red. What does that mean? It means it's confirmed. That's the meaning of thick instead of thin, like the dots before. They're thinner, isn't it? So thick means confirm, and red means is a down market. So far, at least for the next 15 minutes, we want to be sellers of crude oil. We will not be planning to go long. We will only be planning to go short. From a probability standpoint, every time crude oil gets short, statistics suggest that the market will be falling for 5 to 6 candles. I always round up. So 6 candles going down, 6 candles, 15 minutes each. That's an hour and a half. So we have an opportunity to catch a 1 hour and a half move to the downside. And this is candle number 1 in that potential climate of up to 6 candles. And therefore, we are potentially going to enter a trade at the very beginning of the development of such climate, and that's great for risk and reward purposes, in the sense that we are in a position where we could, assuming the UFOs allow us to do so, we could ride a move which is gonna expand and propagate, and that's nice because it's gonna give you a greater reward to risk ratio. If you were to be trading in a defined climate and confirm, but that number, let's say the number is 8 out of 6, well, that actually tells you that you are beyond what probabilities suggest, and that climate could change from red to blue anytime. So it may not be the right time to take the trade, okay? Good. So with all of this said, we know we want to be sellers of crude oil. And again, feel free to interrupt me and add questions anytime. So with all of this in mind, we are looking at a reference price of 52.69 for our selling. And that, when looking at the time frames above, it's located here or here or here. Okay, and I have a good and a bad news for you. The good news is that while in the chart in the middle, we don't have any red UFO around that price level, which would be ideal. The charts on the left and on the right do provide UFOs located around that reference price point for our entry to the short side. So good news, we have multiple UFOs teaming up, adding on-field orders to sell in the market around this price level in a predefined climate where statistics suggest that crude oil is more likely going to fall than going up. So all of this is beautiful so far. Now, bad news. We're gonna discard the trade. Okay, so it's pretty bad news. Actually, I'm joking. The life of a trader is to discard trades more often than when you accept them. That's how we become picky. That's how we become selective, and therefore we add probabilities, right? So I was kind of joking. Not sure it was funny, but it was kind of a joke. So why are we gonna reject the trade? Well, because while the climate and the UFOs are in the right place, from a risk to reward point of view and from a risk management point of view in general, we got a problem. And what's the problem? Well, problem number 1 is that UFO by itself, it's a fat one. Okay, and nothing against big things in life. Okay, I'm just saying that if we were to use that small UFO for the entry, so you would envision the entry to be in one side of the UFO and the stop on the other side. Therefore, the vertical distance that the UFO represents actually represents your risk. In other words, a thin UFO carries less risk compared to a large UFO like the one we have here. And why is that a problem? Well, the problem is because the way we're going to trade, right? So if I was to execute a trade, I would go ahead and set my entry here, set my stop here, okay, find where my final target is going to be. Let's say my final target was going to be all the way down here. So what would I do? Well, I would not just get into the trade and just hope to hit the target and that's it, which again, guys, thanks to the climate is more likely to happen than not. But this hopeful approach to trading is often problematic. So one very powerful technique for us is to use a safety target, which is basically calculate the vertical distance from entry to stop, okay, and project that same distance below, okay? And when we get to that same distance below, go ahead and take half of the profit out of the equation, half of the size. Why is that powerful? Because then you remove the risk of the trade. And if you were to be in a situation where the market came to your entry, right, and started moving your way, okay, got to more or less this point, but then turn around and stop you out, well, because you took partial profits at this price point, even though you get stopped out there because you took profits with half of the position and you get stopped out with half of the position, you are actually breaking even. So you didn't lose money. You were right only for a little bit of amount of time that was good enough to remove the risk of the trade. And then if you were wrong, on reaching your target, at least you didn't get hurt. So that's smart. But what's the problem? When the UFOs are large, then your safety target is far. And the further away your safety target, the less safety it provides and the more it behaves as a target, right? Instead of safety. Again, going back to the narrow UFO, if I was to enter here with my stop here and my target was located at the same distance below, well, now just by moving a few ticks in my favor, I would be out of risk. And that's it. And the beauty of being out of risk, not only is that you are out of risk, I guess it's self-explanatory, but the beauty is that the moment you are out of risk in trade number 1, you can now go ahead and execute trade number 2 in parallel. So in other words, when your safety target, this is the lesson, when the safety target is too far, it's more convenient to pass on the trade, even though probability is in the side of seeing crude oil fall. It's better not to take the trade, because then you would be stuck in this trade for a long time until you either get stopped out or you get to safety target. And if you get to safety target, again, it's so far away, and now all this time is spent without being able to execute other trades in parallel. And again, it's not ideal from a risk management and convenience point of view. That's my point. Okay, so we are going to pass, even though the setup is valid from a probability standpoint. It is not convenient from a risk management point of view. Okay, so hopefully this makes sense. And if it does, that's perfect, because I may come back later to the crude oil and we may reanalyze what happened. But so far we don't have a valid trade. So what do? No problem. I go back to my red screen and let me freeze the screen again and see what's available. Well, apart from crude oil, we are given a potential opportunity to go ahead and check what's going on with the Nasdaq. It's a blue climate. It's near and sensible. So that gives us permission to load the chart and look further. And we may have a trade available on the Nasdaq. So loading Nasdaq. Okay, we got NQH 21. Okay, and let's see what's available here. We may have a trade here. Let me check. So climate on the 15-minute time frame, it's thick and blue. So thick and blue means that it's confirmed. So time to trade. Time to trade to the long side. That is the meaning of blue. So in the next 15 minutes, we'll be focusing on going long and going long only. So we are looking for a long entry, and that should be located around 71, 72, something like that. Okay, 71, 72, 70. Okay, so let's find out where these could be. Okay, so 70 is more or less here, and on the chart on the left there is nothing. Now 70, 71 is here, and that's a UFO lining up beautifully. Okay, 59 is here. Okay, and actually coincide with that value, meaning that even though we don't see it exactly like that because it's two different charts, the reality is that this UFO and that UFO, they're actually overlapping each other, which is great. It's a nice piece of evidence that different time frames are helping auto UFOs to identify on-field orders in the same price location. That is kind of like an extra, advantage for the trade. Okay, now I'm not super delighted with the trade because of the thickness of this UFO. But again, I'm gonna go for it, and the reason why the Nasdaq is a market of a little bit of a lower price point, is $20 a point versus $50 or $100 with crude oil, and also equity markets have been volatile recently, and definitely right now as we speak. So we can see plenty of volatility to the downside, plenty of volatility to the upside. So this distance to be traveled doesn't seem that much to me. Based on what I see on the screen. Okay, so therefore I am opening the door to go ahead and plan a trade on using that UFO, and therefore the only thing I need right now to approve this trade is to find a target, which I'm going to do on the 15-minute time frame. Okay, and you will want to look for red UFOs above price, and here we go. So the red UFOs are located at 13,229.25. Okay. So 229.25 is the location of the UFO for targets. Okay, so 229.25. Okay, So I'm just gonna make a note so that way I don't make a mistake later on. So 13, 229, 25, that would be the location for our target, which is gonna be much higher. It doesn't fit on my screen here. So we're planning, it's a very far away target, to be honest. It's one of those ideal targets that make no sense. Why is that? Well, because we are doing intraday trading, and therefore before 5 p.m. New York time, we have to close the trade no matter what. So when the target is very far, it's great because potentially it gives the opportunity for the climate to propagate so nicely. But the reality is that unless something very powerful happens, the likelihood of reaching such far away target in a few hours or a few minutes is very, very low. And therefore, you are probably going to end up trailing stop, trailing stop, trailing stop, and somewhere in the middle of the day you get stopped out, and okay, great, you just maximize your profit and you'll be happy. So again, it's always nice to start with those super far away targets. At the same time, it's almost never the case when we get to reach such targets. Okay. So anyway, so what is my entry? So my entry is 59.75. Okay. So I will want to have an order there. Let me do something to quantify the risk of this trade a little better. So it seems that we may have some time before. Let me see. I just want to open a different layout here. So we'll open the UFO layout. So let me load NQH21. Okay, 2021. Here we go. So I got the symbol here, and the reason why I'm loading this on TradingView. Here we go. Let me connect to TradeStation. Oh yes. I'm gonna have to do a quick validation. Give me, if you don't mind, I'm just gonna do this on my other computer screen. One sec. Just gonna have to validate that me is me on my phone. Allow. Here we go. And I'm about to get real-time data on TradingView through TradeStation. Beautiful. 1, 2, 3. Here we go. We got it. Okay. So why am I doing all of this? Because I want to use the order panel here on the right to be able to quantify the risk of the trade and everything else. So we said our entry would be that particular UFO. That UFO is located at 78.25. Okay, 78.25. So 78.25. That will be my entry. Okay, my profit we said was going to be 229.25, I believe, right? 229.25, yes. And then my stop, we said the stop would be below the UFO, and we said it was going to be 13.059.75 minus 1 tick. In the case of Nasdaq, 1 tick is 0.25, so we're gonna drop it to 0.5. Okay, so what do we have here? Well, we have a trade. Again, as I said, the UFO is quite large. And because the UFO is quite large, this trade carries a risk per contract of $375 in exchange for $3,000. So it's an 8-to-1. So again, nothing wrong with that. But at the same time, to some of you, again, I'm always trying to be sensitive and put myself in my shoes. I would understand or would expect that some of you are in learning stages, and that's why you're part of the sessions. And therefore, probably if I ask you to take a trade with 2 contracts where the risk is $375 each, to some of you, that's fine. To some of you, it may be just a bit too much if you're in practice mode. So what I'm going to do is I'm going to reconvert this trade to be executed using the micro E-mini instead of the E-mini. And therefore, everything is going to be 10 times less. So instead of 375, the risk of the trade will be 37.5. Okay, 37.5 per contract, which is 10 times less. So how do I do that? Well, I just click on the matrix. Okay, and as I click on the matrix, instead of using NQH21, I'm just going to add the M in front, M for micro. So M NQH21. And now the matrix that is loading on the right, it's actually helping me to trade the micro E-minis instead of the E-minis. So I just cut by 10 the risk of the trade. So now it's easy for me to go with 2 contracts at a time and manage my risk properly and so on. And therefore, I'm just going to go ahead and do a trade with 2 contracts. It's going to be a trade to go long with 2 targets and 1 stop. And because the Nasdaq, moves many points a day, so instead of using the matrix and drag up and down, which would take a long time, I'm just gonna input the values, okay? Which we said entry would be 13,078 point, was it 75? Let me double check that. 25, okay? So 13,078.25, that would be my entry with a stop located at 13,059.5. Did I say this right? Yes, 13,059.5. That's the location for the stop. I need to type it twice, one for each of the bracket orders. Okay, here we go. And then I got my final target, which we said was going to be 13,229.25. Okay, super fantastic, probably unrealistic target given the fact that it's intraday trading, but we're gonna go with it. You never know. And then I need to calculate the location for my safety target, which is basically take the entry, okay, 78.25, subtract the location for the stop, which is 59.5. That is 18.75 points. By the way, I could have seen that here in ticks. That's 75 ticks. 75 ticks times 0.25 is 18.75 points. And now that I know this, what am I going to do? Well, I'm just going to go ahead and add this value to the entry, which is 13,078.25. And that brings my safety target to be located at 97. 13,097. Okay, so this is the plan. Okay, I'm just going to zoom in so you guys can take a screenshot if you feel like it, so you can review, and then I'm going to explain it on the screen as well. But I guess you will appreciate to be able to take a screenshot so you have the values. So if you're gonna demo trade or take this trade or whatever, at least now you can see clearly. Because sometimes the font, or maybe you're watching this on your phone and maybe everything looks very small. So hopefully this makes sense and you took a screenshot and it's all clear. So we have it there, and I'm just gonna enter the trade by clicking send order. Now we won't see it on the screen. Why? Because the symbol I'm using is the micro E-mini, where the symbol I'm charting is the NASDAQ. Okay, so now should I chart the micro E-mini instead of charting the NASDAQ E-mini? No. Why not? Because the price points are going to be very slightly different. It's going to be almost the same, but there will be a little tiny difference. And I don't want to base my entries and stops and targets based on the micro E-mini, because there is less liquidity and therefore it's less relevant, even though it's super liquid, to be honest. But the E-mini is a better bet. Okay, so the order is in. Okay, so the order has been received. Okay, you can see here on the matrix, received. Okay, so the order is in. So if we get filled, we'll see the execution on the matrix. You can also go down and you can see the orders there. The entry at, that's safety target at 97. You can see the entry here at buy 2 contracts at 78.25. So we have the order in, even though we don't see it on the screen. Okay, so let me explain a few things. First, the entry was set here with the stop here with the safety target located at 97, which is, as I explained earlier, the same vertical distance that we had from entry to stop is being projected above, and this sets the location for the safety target. We calculated to be 13,097. Okay. And by the way, guys, now that the trade is in, I would certainly appreciate a little bit of feedback from you guys, even if it's just to type OK. A bit more detail would certainly be appreciated, but if you want to keep it short, at least you give me some feedback and I know you are with me, guys. And if it's not okay, let me know, guys. And I'm happy to repeat whatever was not okay. And then finally, the final target located all the way at 13,229, which is way higher. Doesn't fit on my screen there. We need to scroll down. Again, very ideal, on paper, theoretical type of target, but again, I made my point earlier, will very likely trail stop, and see how far it goes. Not sure. No, I don't think we'll reach that price point in an intraday session. Okay, it's a bit far, even though, of course, the markets are volatile in recent times and anything could happen. So let's position ourselves for it. Why not? Okay, so that's the trade and the rationale behind it. I want to make one more comment. Again, looking for your comments and feedbacks. I would like to see that. Here we go. Okay, so now it took 10-15 minutes for me to explain all of this, okay? And while I was explaining all of this, of course, the 15-minute time frame chart evolves and it produced a new dot, meaning that now we have 4 dots in the climate instead of 3 as we had before. And by the way, in 6 minutes time, we will reach 11:30 in New York, which means that another dot will show up on the 15-minute time frame. And every time we have a new dot, a new candle, what happens? Our reference value changes too, okay? Because it's an average and it's a moving average. The M stands for moving, and that means it doesn't stay the same, okay? It sounds silly, but you gotta always remember it's a dynamic thing. So you may think, wait a minute, Jose, the trade is not valid anymore because 87 is now here, okay? So should I use that UFO instead? Okay, that UFO goes from 93 to 85, and therefore 87 is in between that, inside that one instead of this one. Okay, so what would I say to that? I would say no, we're gonna stick with the same one, and the reason why is precisely because a moving average is a moving thing, and we need to anticipate the movement that will take place on the moving average as price comes back down towards the price of our entry, which is 13,078.25. So if the price of the Nasdaq drops from 149 to 78, that's 70 over ticks drop, if I did the math correctly in my head. Not ticks, actually points. Okay, so if this drops about 70 points down, well, what's going to happen to our EMA? Well, it's not going to stay at 88, and certainly it's not going to stay above 85. Okay, so probably it will drop by, let's say, maybe 10 points, and now that EMA will be lining up properly with that UFO, and therefore that UFO is still valid for the trade because we are kind of like taking into consideration the fact that the moving average will move. Okay, now price is quite far, and you may be thinking, what if it doesn't line up perfectly? What do we do? Well, one way to approach this is maybe you just draw a line somewhere here, and you just set yourself an alert. Okay, so you go trade other markets, and while you set an alert, and then you get a pop-up message on the screen, a sound, whatever you set up. So when and if Nasdaq was to fall and hit that line, you will be alerted, and now you will be able to see the new updated value when price is close to the entry, and then you will be able to either validate or discard the trade. My suggestion is to go with the trade, because it's faster to rush and click cancel all and cancel the trade versus have to input everything like I did earlier: entry, stop, target one, safety target, I meant to say, final target, all of those things. That takes a lot of time to input. So it's easier for you to have the trade in, have an alert, and if any, go ahead and rush and cancel all if you were to see that the EMA is still above the UFO when price is about to enter the UFO, and we don't have that enveloping setup that we are looking for. Okay, so keep all of that in mind. And again, I'm aware that I've just been non-stop since we started, so let me pause here for a second. I see a couple of comments on the chat box, and we'll continue immediately. But I just wanted to throw all that information. Again, for the ones of you that are part of the sessions on a regular basis, this is our bread and butter. For the ones of you that are newer to the sessions, maybe it was a bit intense, a bit too fast, you can certainly always use the recording to rewatch, or just keep joining the sessions, guys. And as a good friend says, we learn through osmosis. Okay, so you just need to be exposed to it over and over again, and there is a moment in time where it clicks. Okay, ask questions in the meantime, so make sure that you don't develop bad habits because something was misunderstood, either because you didn't get it right at the first time, maybe because I was rushing the explanation, or maybe because I didn't phrase it the right way. I'm human too, so it's important that you ask questions to clarify. Luis, hello. The UFOs don't represent a problem for the entry. UFO. Oh, got you, Luis. Fantastic. I love your thinking. I'm happy I kind of answered the question before I read. At the same time, love the fact that you were thinking about it, because that means that you are not watching the session with your arms crossed and your legs crossed and answering WhatsApp messages in parallel, you are actually thinking about I'm going to be doing this, I'm doing this. What if this happens to me when we are not in the YouTube session and I see this happen? What do I do, right? So that's the type of interactivity and engagement I'm expecting from you guys, and well done. So anyway, crude oil is doing its thing there. Okay, so back to where we are. So new opportunity here on the euro contract. Okay, so the euro contract is giving us an opportunity near sensible. Notice the red background. So this is an opportunity to short. So let's go ahead and load the euro contract. We're going to be using H21 as well. So at ECH21, here we go. So let's go for it. Okay, so let's begin, of course, as always, we start with the climate. So what's going on with the climate? So 15-minute time from climate for the euro. It's confirmed and down, as we knew from the red screen. Statistics suggest when the euro falls in this time frame, it's going to be up to 8 candles. And we are in candle number 3. So again, we are definitely not late to the party as long as we find a good entry to take this trade, okay? So all of this is looking good. Now, if we were to take this trade, what is our reference price for the trade? 95. Okay, and 95 is falling right inside the UFO, so we better rush. My friends, we have a trade. I'm just a bit concerned. What's the lowest part of that UFO? It's 21, and that one. Perfect, we have a trade. The setups are valid. I'm just gonna rush a little bit because I don't want to miss it, guys. And if I went too fast, then I will go ahead and re-explain everything so you guys don't miss anything. So I don't see any UFO, any green UFO below price, which probably there is. I need to load more data, but because I don't want to miss the trade, I'm just going to go ahead and by the way, notice a new UFO also formed here. So we have 2 UFOs on the right and the left. So we have 92.5 is the bottom part, and here we got 92.5 is the bottom part, and both got 98. So we got a beautiful confluence of UFOs in different time frames. So 92.5 is going to be our entry. I'm just going to go ahead with 2 contracts as I do. I default, of course, in your case, calculate your risk and your size and everything else. I'm just going to go quick with it, enter the trade, and then I'll find a target. So I want to be located, my stop needs to be 98.5. That means my safety target will be located 86.5. And my final target, so now I'm going to spend a little bit of time to find the final target. Yeah, I believe I just canceled the final target. So let me do that again. Cancel. Here we go. So 92.5, one more time. Click on the sell. Stop. We go 98.5, safety target 86.5. I will explain all of this in a minute. And then the final target, I just want to move it away so it gives me time to go ahead and find a proper target, okay? So I'll come back in a minute and explain everything about this trade. A summary would be, climate is telling us to short, reference price is 94.5, 94.5 is inside that UFO, so we have a valid entry, okay? The UFO envelopes the EMA, we have a valid entry. What I didn't find is the final target, and I'm moving quickly because I don't want to miss the trade. We got 10 minutes left before the session is over. So now, take a look at this. So I'm going to disable AutoClimate. I'm going to go back to a daily time frame. If we move to a daily time frame, the last time we've been solo on the euro was about November 20-something, okay? November 20-something. So if I go back to my 15-minute time frame, which is my climate time frame, what happens? My settings here have me load data for 500 bars only. So what am I going to do? I'm just going to make sure I have data all the way to November, let's say November 20. Okay. And when I do that, I'm pretty positive. It may show us a PD pending data. Here we go. So we just need to wait. But the moment I do that, here we go. I was going to say I'm pretty positive we're going to have UFOs below. So this is going to be our target. I just needed to load more data, and I didn't want to miss the trade, so I placed the order, and now I'm finding the target. In a perfect world, you invert it. Okay, you find the target and then you place the order. But again, I knew it was going to be kind of like that, so I wanted to rush it. So 120.76, that's the upper part of that UFO, and therefore that number will be our target. So now I could go back to my matrix, okay, and set up the location for my final target to be 76. Okay, so now I got my entry, my stop, equal distance below my safety target, and the final target is located at 76. Why? Because 76 happens to be that green UFO on the 15-minute time frame, which is likely going to reverse the climate, or at least stop it in a very bad manner. And it would be more convenient for us as a trader to get out of this trade and maybe re-enter a new one at a higher price point with a new UFO, with a still in the climate, with a new value of the EMA, instead of just stick with it and hope for the best. Okay, we don't hope. So in other words, we have the trade on. Okay, please go ahead and confirm. I did this planning quite quick. To be honest, it's a very simple trade compared to the prior trade, because we only have one UFO. The final target is nearer. We can see everything on the screen. We are not using the micro E-minis combined with the minis. It's all E-minis. So I think it's an easier plan. But in any case, again, please go ahead and type. If you are with me, type OK. If you are not with me, if you are confused, if you have questions, go ahead and phrase it so I can help you better. Okay. In the meantime, again, this is kind of like housekeeping rules. I like to reorganize everything the way I like it to be. So I'm ready for the next trade without having to rearrange anything. So I'm back to my 500 candles. I'm back to my auto-climate. So if a new trade needs to be planned later on the euro, everything will be in the right place. Okay, but this trade is certainly valid. And nothing to be done here until we reach 1145. The only thing that could happen is that when we reach 1145, either the climate has changed or our reference value has moved down intensively and is not lining up with our UFO anymore. Could that happen? Yes. And if that was to be the case, what would we do? Well, we would need to cancel the trade. Okay, but again, it's looking good so far, even I would say for the next 15 minutes. So I'll come back to the chart and comment on it. Hopefully we'll get filled in the remaining 10 minutes, so I can also comment on the trade itself and the trade management and things like that. So far, we got a trade plan. Tony, thank you so much for confirming that. I really appreciate the interaction, my friends. Back to here, and let's see where we go. So, read the screen. What else do we have available? Okay, Tony's question. Let's go back to the chart. So Tony says, what about the new red UFO, this one? Okay, I was wondering, let's see if someone asks about it. Okay, and you did, Tony. Love it. Again, putting yourselves, putting yourself ready to do this by yourself. All those days where you are practicing on your own. I really love these type of questions. So what are we gonna do? Well, think about it. Can you take this trade if price comes to this UFO? Could it be that price comes to the UFO and collapse from there? Could that be? Yes, especially given the fact that the climate is red. Okay, so could you take the trade? Well, it depends on your trade plan. Okay, if you were to utilize the trade plan that I am implementing in the sessions with you guys, then I have a very rigid rule, which is I only take trades using UFOs that line up with the EMA. Why do I have a rigid rule? Well, rigid is good because it's going to make me disciplined. Rigid is good because it's going to avoid subjectivity. And on top of that, the fact that the rule is lining up the EMA with the UFO means that I have indirect forces working together with direct forces. What are the direct forces? The on-field orders. What are the indirect forces? The indirect forces is anything that may add more on-field orders to the on-field orders already available. So computers trade EMS, even humans trade EMS. So it's very common that a lot of computerized trading systems, especially the ones that are trend following systems, which are typical systems, operated by hedge funds. It's very, very typical that they trade using price points that are automatically calculated based on EMS. So if a computerized trading system that belongs to a large market player is going to inject many on-field orders at the price point where the EMA is, and that price point happens to be a price point where on-field orders are already available, well, the two things together are adding odds in your favor for you to see the price of that market you trade to move starting from that price point. So I like to be rigid in that sense, or at least this is the plan I implement in the sessions, because rigid makes me mechanical, rigid makes me disciplined, but on top of that, it adds odds in my favor. So now, would it be wrong for you to take that other trade with that other UFO? No, it would not be wrong. You are still trading in the direction of the climate, and you are trading at a price point where on-field orders are available. So something is likely to happen there, at least the market pausing or bouncing a bit. You may not have a larger reaction, but you may have something happen. And sometimes, actually, the climate is so strong in its propagation that actually price will never come back to the EMA and just keeps going. And then that trade will be fantastic. Okay, while it carries less odds, that day it will be fantastic. So what are your possibilities? Well, option number one, don't take the trade and be rigid like I am, or at least the way I presented in the sessions. That's option number one. That would be a valid plan. What is another valid plan? Take both type of trades. The ones with UFOs in the direction of the climate and the ones with UFOs that line up with EMS or any other tools, could be FIPS or anything else. What is another more sophisticated way to approach it? Well, take all of those trades, but depending if you have a confluence with a UFO and an EMA or you don't, vary the size or the risk of your trades. So for example, if price comes into a UFO which is enveloping an EMA, I'll take the trade with 4 contracts. If price enters a UFO which is not enveloping an EMA, which is not a crazy thing to be done, but it carries less odds, so what do? Then I may use 2 contracts in that trade instead of 4, so I reduce my risk because the odds are less. Again, you may be stepping into adding complication to the way you trade, but I'm just adding options for you since there is no one way on how to trade. To be honest, there are many ways on how to trade, and not only because there are many techniques available, but because no matter which technique you use, it needs to be adapted to your trading psychology. Let's say, Tony, and I'm not saying this is your case, but let's say, Tony, you are a person who really has no patience at all. And if you were to be waiting, which I phrase positively as I force myself to be disciplined, but let's say, given your personality, which again, I'm not saying that's you, but let's say that waiting time to you, instead of making you feel like, hey, I'm doing the right thing, I'm being disciplined, instead, it was getting you in a position where you are going to be thinking like, I'm wasting my time here. I cannot, what do I do now? And now you start getting eager, and there is a moment in time where this triggers some negative human emotions. And I think next thing you know, subconsciously, you find an excuse to get into a trade with less of a proper plan. So you know what? I better see you trade more aggressively, but that matches your trading personality, instead of be that conservative, but that's totally against who you are. Is that making sense? So it's very important that you understand your choices, and then you go ahead and you give yourself the opportunity to back test it, to forward test it, to trade it live for a while with a small position size, to see how you feel with it, how you manage your emotions, and basically come up with your final trading plan, which is in the end is unique to you, because the time of the day at which you trade is unique to you, your personality is unique to you, the amount of capital in your account is unique to you, your goals, how many trades you want to take per day is unique to you. You got my point. Okay, so long answer to your question, but again, since the Russell Index, which is the other trade I was going to look into, was giving us a non-confirmed climate, so I thought of expanding my explanation for you here. Gold is giving us an opportunity, so I'm just gonna open gold very quickly and then review the euro, and this will take us to the end of the session. Again, gold is a commodity, so if you're not guessing it, here is the first thing I'm gonna do. I'm gonna go to my barchart.com website, check metals, check gold, and make sure I'm gonna be using the right contract. And Tony, by the way, if let me know if this answer was useful to you. The J contract is the one we are supposed to trade. The greatest value on the right are here, and that does line up with J. So we're gonna go with the J. So GCJ 21, that's the one. So loading the chart. And here we go. So climate, confirm and red. Okay, now careful, 5 out of 6. Okay, so this is probably going to be a trade which is kind of like a quick in and out. Okay, it doesn't look like this trade is going to be such an amazing trade, even though sometimes climates will propagate to levels that were not expected. Okay, for example, here you can see a collections of dots of the same color, which means that the propagation was more intense than what probabilities were suggesting. Okay, so certainly valid for us to position ourselves for the trade. So what do we have? Reference value for the trade is 66, which lines up perfectly with that UFO. But careful with that, because 66.7 is lining up with that UFO. So really our stop needs to be located at 68.2. Okay, so looking for, and we're going to have to rush on this trade big time because price is already in the UFO. So it's time to take the trade. So my target is going to be 59.7. So 59.7, that would be the target. Here we go. So 59.7. So let's go with it. I'm just going to enter at current price. So I'm just going to go short 2 contracts at the market. My stop needs to be located at 68.3. Okay. This is a trade, by the way, which is going to be pretty intense when it comes to its risk. Okay, so it's a trade that you could execute with wait a minute, 60, correct, I did it right. So this is a trade, let me see, yes, it's all good. So this is a trade that you could execute with the micro gold contracts. Okay, I'm doing it with a full contract, so you see it visually, but that carries a risk of $520 in this trade, as you can see. So it's a pretty high risk trade. I mean, depending on your account size and your experience, but I would say for most it's probably a pretty high risk trade. So I'm in the trade. Okay, and final target needs to be located at 59.7. So I'm just adjusting it. So 59.7. Right there. So here's the trade. Okay, so we entered where the UFO is. Stop is up there. Safety target, as you can see, is a bit far. So it's not ideal if you go back to my first comment at the beginning of the session today. And then final target is all the way there. Okay, so we are in the trade. So far, you can see the fight. Buyers trying to come in. We just had a green UFO form. That is not good for the trade, even though the climate is still in our favor. But reaching its end with actually we just reached candle number 6 out of 6. Okay, so basically we should stay in this trade for another 15 minutes and then it's over. Okay, but anyway, putting that in on the side, we are in the trade, and the one thing that this trade allows me to comment on is trade management. Okay, which is something that we haven't discussed today. And to do that, I would like to go ahead and draw a vertical line where the current value, where we entered, which was this candle. Yes, we entered at this candle. Let me do this again. We entered when price was here. That was 11.48. This is when we got short 2 contracts. Okay, 11.48. And the rule I'm going to use is to use 3 candles in the time-based edge time frame, which is 2 minutes each. And if after 3 candles I haven't reached my safety target, I'm going to use a time stop to get out of the trade. Okay, so that means that we are dealing with candle number 1, candle number 2. Oh, we just got stopped out. Okay, so then that's it. The trade is over. So yeah, so you see, that's the thing with the climate. It was by the way, two things at the same time, two comments. Sorry to add so much information. So the fact that climate was reaching its end based on probabilities, it was making this trade to be lesser probability. Okay. The fact that the UFOs were very wide was making this trade a potential problem. If I zoom in carefully and I had taken this trade earlier, if this was my entry instead of the second candle, the first one, and that was my stop, and same distance below, I had my safety target, I believe, okay, maybe I'm not sure if I'm right or not, but maybe there is one tick difference, but I believe that we should have been able to remove the risk of the trade before being stopped out. So in other words, if we only had one UFO, which is narrower, notice the benefit of using the safety target. Now, because we entered in the second candle and on-field orders had been filled already, you can see this UFO is light compared to that UFO which is darker, isn't it? So on-field orders were filled already. And on top of that, there was an overlapping of those UFOs with the other one being on the chart on the right, and I had to put my stop all the way on the top. So then I got two problems. The climate was reaching its end, and the thickness, the distance from entry to stop was making my safety target very far away. And all of this basically was working against the trade. And then, as you can see, we just got stopped out. Okay. So anyway, in any case, what I was going to say is, okay, so if you entered at 11:48 and you're going to have a rule, which is 3 candles for my time stop. So that means that 11:48 plus 2 is 50, plus 2 is 52, which means that the moment you reach the candle that will close at 11:54, which is 11:53. So if you haven't reached your safety target, you will want to close this trade manually. That's a time stop. And the reason for the time stop is because you enter the trade in a specific climate condition. So you expect something to happen. So if nothing happens for a while, it means that for a while on-field orders are being eaten up. That is basically eating up the probability of your trade. So instead of sticking around and hope for the best, you just get out and you go trade something else that potentially has more probabilities. Okay, and that's what you would do. Okay, and so this was a trade on gold that failed, but this is how we would have approached it. Okay, when it comes to the euro trade seems to still be valid. Okay, so we are still in the climate. We got 4 dots. Okay, climate is up to 8. This is, as you can see, is way better than what we saw with gold. And our reference price here, it's 93.6. When the price of the euro goes up towards our entry, the EMA will go up. So 93.6 will become 94.95, which is indeed inside that UFO. So the trade that we planned 15-20 minutes ago is still valid on the euro. So we're gonna conclude our session now. But for the ones of you trading, certainly at least during the next 15 minutes until the top of the hour, this trade is still valid and is to be reconfirmed. And you guys feel free to shoot a message, shoot an email, and you let me know how the trade went if you executed it. Okay, you guys take care, my friends. It's been my pleasure as always to be running the session. We only had one execution today. I like to be a bit more active than that. In any case, hopefully the session had value to you, clarified some of your questions, or open your eyes to certain things that could be done that you should be doing, or that you are not doing exactly the way you should, as I've been sharing the thinking behind the scenes as I was working on the charts. Okay, guys, so you guys take care. As always, a pleasure. How are you, Mark? Good to see you. You guys take care, everybody. And you know what? Before we conclude, I would like to very quickly point at a new portion of our website in case you guys want to explore, because there is a lot of novelty in that section of our website. So I'm just going to type the URL, and then I'm going to show it to you. So it's tradewithufos.com/courses. So we have a collection of courses that we are releasing that may be of your interest. You guys have been asking for a while. Courses on futures, on stocks, on backtesting, on trading psychology, and more. So there is a collection of options for you guys. Feel free to take a look by yourself, but you will see when you scroll down futures courses, forex courses, options courses, all sort of things there that could be useful to you. So you guys have fun exploring the website. Feel free to share some feedback on your trades on the website. If you have questions, of course, we're here to help as well. Remember, the support email is support@tradictive.com. So shoot your questions, and again, delighted to be there for you. Everybody, you take care. Stay safe with Corona, and we'll see you soon, my friends. Bye bye. Take care, everybody.